In this video, we will be discussing the price to earnings to growth ratio, also known as PEG. If you haven't seen our video on price to earnings yet, I recommend you watch it before completing this video, as a lot of the preliminary concepts for the PEG ratio are covered in that video. Here is the link. Otherwise, let's get right into it. To calculate the PEG ratio, the first thing we need is the company's price to earnings ratio. As we discussed in the price to earnings video, the PE ratio is the most commonly used valuation metric, but one of the major limitations is that it doesn't encompass a company's future growth into the ratio. That's the benefit of the PEG ratio. The PEG ratio also encompasses expectations for the company's growth. A company could trade at 30 times earnings, which is relatively high compared to the market average, but if the company is expected to grow 30% for the next few years, it may actually be undervalued in the eyes of some investors. Traditionally, a PEG below 1 signals the stock could be undervalued, and a PEG above 1 may signal it's overvalued. So how can you apply it when evaluating companies? Let's look at an example. On the left, we have Home Depot. Home Depot has a PE ratio of 17, which is similar to the market average. Analysts expect Home Depot to have a growth rate of 7%. This makes Home Depot's PEG ratio 2.4. On the right, we have Tesla. Tesla has a PE of 88, which is extraordinarily high when compared to the market average. But analysts expect Tesla to grow 55% each year for the next 5 years. This makes Tesla's PEG ratio 1.6. So when you compare the PE ratios of Home Depot and Tesla, Tesla does appear extremely expensive. But once you factor in expected growth, Tesla's valuation begins to make more sense. Now, whether or not analysts are correct in their expected growth rates is another story, which is one of the major limitations of the PEG ratio. Analysts can be wrong in their predictions, which would invalidate the PEG ratio used. That wraps up this video on the PEG ratio. Be sure to check out the rest of our channel for more educational videos on finance.